Let me show you how I came into conclusion that this place is my entry, and this is my stop loss, and this is my final TP. Basically, all I did was I went to 4 hour time frame and see what's happening, and based on the 4 hour time frame, we saw there was it was an uptrend forming a higher high and a higher low. So basically, this is the last place after the consolidation or accumulation it took off. This is the place that it took off, the last accumulation before after this pullback. This is the last place that started to forming this massive trend, forming a higher high and a higher low. It was forming a higher high and a higher low, higher high, 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 before this correction. This correction doesn't necessarily mean there is a change of character. I assume this is a correction, but the only time that I assume that there was a change of character is when we had a break below this level and retest to this zone, and it came back below this level. That should tell you that the trend is about to change. But to my understanding, I took this as a correction. So after I got to know that, based on here, I started seeing this move. It was forming. So I moved quickly back to 1 hour time frame to see it clear, like to see the trend again. So what basically happened was, when it was dropping down, it was forming what? A lower low and a lower high, a lower low and a lower high, a lower low and a lower high and a lower low. And this is where the trend ended. So we see the downward trend also. So before I came into conclusion that yeah, the market wants to change again to uptrend, this is what I did. So I marked this level. So I was like, if we have a break, maybe this place or this place, above this place, there should be what? A change of character or break of structure, however you name it or however you call it, BOX. So this is where I knew the market is going to change. But before it can continue going forward or upwards, there should be a correction. So after it broke the structure, it came to retest it, and we should look for an imbalance in a demand zone for our entry. And if you look from here to this place, all this place has been efficient. There was no imbalance at this place. You come to this place, the only place that we have imbalance in the 1 hour time frame is this. Before, so there was a consolidation of 1, 2, 3, 4, 5, 6. There was a consolidation of 6 candles before this impulsive movement, and then we have to have a rectangle drawn. So we have to have a rectangle drawn to show us that's our point of interest. Because before having our point of interest, after it broke this place, let's assume here it broke, there was a change of character right here. It came to retest this place, and then it went to form another, to break another character, but there was an imbalance here and it never fell. So this place, this movement, this rally is sufficient, is efficient, is efficient, and this is from this place to this place. The place that are not efficient is this and that, but we always want to buy it below or at the discount price. So if we buy it here, this place might be what equilibrium price. From here to here, this is the middle. So the middle is the equilibrium price where you bought it, or if you buy it there, it's not cheap and it's not expensive. So but definitely the market was reacted at that place. So if you look at this demand, you see it tapped from here, after it break the structure, it came to tap inside the demand, and then it reacted. But still, the buyers are not, most of buyers are not happy to buy here, and there was a supply. It further pushed down here, and still people were not also happy to buy it here. It couldn't hold it. Eventually it came to the overall boss. That is where, after below this level, every place, so the moment it breaks this level, it has to come to this level, because there is nothing that is going to stop it here, because everything here was efficient. Perfect. So when I got to know that, I was like, okay, it came to touch this demand, and then it's exploded. From this demand, it went ahead based on 1 hour time frame I'm talking about. So it went ahead, and this is the swing high, the current swing high. So after it touched this to fill all this place, so everything from this place now is efficient. Everything from right here, from here, this place to this place is efficient. So there's no reason for the market to come down. The only reason for the market to come down here was this demand, and it's eventually what came to fill it. So other than that, we have no reason for the market to come back below this level again. And what happened? After it tapped into the demand, it went ahead to what? Change a character. To change a character. So we have another what? BOS right here. We have another BOS. Let me put it here. We have another what? Change of character right here, because there was another what? Candle closure above that level, but based on 4 hour time frame, it was showing that it was what? A liquidity sweep, because it came to sweep this liquidity and it came back down again. But 1 hour time frame is showing me that there's a break of structure right here. After it came here, it couldn't break the structure, it came to retest again. So all this phase was consolidating before we had a break of structure. So from this place, I went ahead to look for all the demand and the supply, or in these inefficient places for 1 hour time frame. So this is the one efficient or an inefficient place that I've identified as my demand again. So if I'm to buy again, this is where I'll be very happy to buy again. And I look all these places, every place was the only place that there was a space here. There's a gap right here and a demand here. So if the market wants to come down again, this is where a lot of buyers will be happy to buy again. And all this place has been efficient. It has filled until this place 1 hour after it consolidated, it exploded, and then we had what? A break of structure right here. It broke this place. So I was like, okay, we have another what? BOS right here. After it break the structure from this place, this level, and then it went ahead to go higher, but it couldn't break the overall swing high at this current price. So what happened was that it started forming a trend. It was forming what? A higher high, internal trend, a lower high. It couldn't break. It came back again. It formed an equal low. So anything that there are equal low, so this could be a liquidity sweep or break of structure, however you name it. It came to retest, but the main reason, let me put it that way, I assume this could be an inducement or something, was that there was no sweep of liquidity at this place before this break of structure. So this place, I assume it is inducement. I assume this place is what? An inducement. Inducement means if there was no sweep of liquidity before a break of structure, it might eventually come to sweep this one, and we have what? A reason for the market to come down again. So I felt if the market wants to come, it should come to this demand. If this demand fails, then we come in, because all this place has been efficient, we should expect the market to come to this level again. But at this moment, when it came back to form, it was forming a nice trend based on the market structure. It was forming a higher high and a higher low, a higher high and a higher low. So that's when I was like, okay, since the market from here exploded to form a higher high and a higher low, it went ahead, it couldn't break, it came back to retest, it formed a new higher high, a higher low. It came here, it couldn't do nothing, and then it went ahead to form a new what? A higher high. And then this is when I knew that if it's able to break that level and we have a rejection, and then fundamental economic news kick in, the NFP came to bring it back to here, to this place. And why did I say Kaisanzo? But if you look here, based on the 4-hour time frame right here, every place was sufficient. You see, after we have a break of structure, every place was sufficient until maybe looking at the 1-hour time frame. 1-hour time frame, this place is not sufficient. So I have something that I call, based on my strategy, I call it Kaisan zone. If you're part of the group, of my group, you understand the meaning of the Kaisan zone. Kaisan zone simply means is using market structure, the trend, and then supply and demand zones. So the Fibonacci retracement. So now we are having what? After we have a higher high and a higher low, a new higher high, I always want to buy it at the what? Discount price. So if how I mark it, I mark the current swing low to the current swing high using my Fibonacci retracement tool. So this is the current swing low, and I drag it to my current swing high, and this is where it gives me the Kaisan retracement zone. It gives my retracement zone is 0.07 to 0.85. So within this range, and this yellow line from 0.6 to 0.7 is the golden zone. For me, I don't regard the golden zone based on my analysis, my previous experiences. Then I know most of the time it's reject the golden zone and take people out and come here and reject. So I try to add this number, formulate this number to put it in my retracement tool. So anytime I want to buy between this box, and my stop loss should be below this level. And if I really have enough capital, or if I didn't stack, then I put my stop loss right this swing low. That's what I always do. But eventually we made the trade. I missed it. I put it down before I came. Then it was tap in and it went back again. I was like, okay, let me wait and see the market structure. Let me move so far as now I've based on 1-hour time frame or 4-hour time frame. I knew the market want to go higher because we have a break of structure or sweep of liquidity here again. So let me go back to the smaller time frame to look for an entry to get into this trade, because we missed the entry. This is my an initial entry. So I went back to 15 minutes time frame and look for my entry. But because we missed this entry, this is the actual entry. So now I have to look for an entry to get into the trade. So when it came to tap the Kaisan zone, what happened was that in the smaller time frame, in the 50 minutes time frame, the market was forming a trend also, retracing back to this level. It was forming a lower low and a lower high, a lower low and a lower high. So it failed to form a new lower low, and then we started having a higher low and a higher high. So the market came to change, to break structure right here, this place, based on the 15 minutes time frame. this is the current swing, lower high, and we have a break of structure. The candle, 15 minutes candle, closed above that level. So we had what, a BOS in the 15. Now we are looking for the entry. We have it, and then after we had this break of structure, we also expect the market to come and what, tap into the discount price before we get into the trade. And when you look, this place is sufficient, and we want to change the character. Perfect. And we already have a sweep of liquidity. We assume it has swept all this liquidity. So this is the sweep of liquidity. It swept all these equal lows, this, all these places. The trend, anything beneath a trend, there are so many liquidity below a trend line, below a trend, or equal lows or equal highs. So it came to sweep all this liquidity, and then it went ahead, it came back to retest, it went ahead to break the structure based on 15 minutes time frame. So every place was efficient apart from this demand. After the break of structure, this place is efficient, and this place too efficient. The only time that is not efficient is it left this gap. So I mark my 15 minutes demand for an entry. So when the market came, it tapped into part of the imbalance or fair value gap. It went ahead, but a lot of people are not happy to buy here just because it tapped into the fair value gap. It came here, it couldn't break this level. They tried to take the market up, but they couldn't. They sweep another liquidity. So those who sell, it came to take them out again. And those who bought right here, it came to take them again down here, because this is the actual demand. Now it came to fill it. Now it filled the imbalance. This big candle, massive candle, came to fill the imbalance, and it's what started being choppy. It started being choppy, and it eventually filled the imbalance and came to tap almost all the place to fill the demand. They almost filled almost all the demand, but they was almost hit at the actual stop loss. And now this is where I know this is my entry for the buy. So I place my entry at 56061, and I place my stop loss right below this level. But initially, this is the actual entry, but we have to follow the trend. So I'm expecting the markets, before we could have a fully confirmation that is going to continue buying this, we should expect the market to break above this level and eventually come and break this level also. So we could assume this should be our TP1 and our TP2, and the moment we have a break of structure above this level, there is, if you go to the 1 hour time frame, there is nothing that is going to stop us, because all these places has been filled already. So the only place that has not been filled, there was imbalance here, is this zone, that is 5,292 upwards to 5,453. That's where there might be people will be happy to buy again, because all this zone from 5,000 to this level, it has been filled, it has been efficient. So far as it's able to break that level, nobody's going to buy here again. There's no institutional traders there, unless where there is a massive or impulsive movement or big movements before. So this is the demand, big movement, and it's left a fair value gap. So now if we break this level at 5,992 or something, we should expect the market to come back to 5,292 or 90 before it could tap into this place and bring it back, or break this level and take it all time high again. That's all. So now that's why, as a swing trader, you could buy here and take your TP up to this level. But for we day traders or something, or swing traders, we don't want to keep it. We could come to this level and come back to our entry and retest and go up again. So we expect the market, at least we should take our first TP right here. If you're a swing trader, you take this here as your TP1, TP2, and then TP3 right here. That's all. That's how I came into conclusion I'm buying. So at this current price, I was up by how many pips? I had like 150 pips. Now it came back to 80 pips to 90 pips. So I think let's see how it goes. And London to Asia 2 is about to close. It's now 2:12:28 a.m. So by 2 to 3 we go into London session, and then we go to New York session. So let's see how it goes. Have a good one, y'all.